question from one of the members, and I think it's a good one. I think it's one that is worth recording a video for. So, hey Trish, this is for you, but for everybody else who probably has a similar question, we're going to talk about looking at conservative and aggressive entries, looking at the 20-period simple moving average and the 34 EMA wave on the high, 34 EMA on the high, which is the top line of the wave, and the 34 EMA on the low, which is the bottom line of the wave. Now, of course, the wave is just these three moving averages on the chart. So if I were looking at, for example, let's go to a trending time frame. In fact, one of the time frames I'm looking at right now is the daily, and I'm looking at the Aussie Kiwi and the pound Aussie because we're coming into, in about 2 minutes, a 7:30 hot zone. So I'm actually recording this video as I'm waiting on the jobs numbers, employment and unemployment coming out of Australia. So we could see some volatility. You could already see the 5-minute getting pretty spunky here. I have a downtrend, which is to say I have lower lows and I have lower highs, and the grab candles, the green, red, and blue candles, that's just what I call the grab. They're plotting steadily lower, plotting steadily red as prices travel lower on the daily. So you see these red candles here. The angle of the green, the blue, and the red line, of course, the 34 EMA on the high, the 34 EMA on the close, and 34 EMA on the low, they're all moving down at what I would call a 4 to 6 o'clock angle. So between the steady red grab candles and that 4 to 6 o'clock angle, I have a downtrend, and that's what I'm going to start thinking about, using that 20-period simple, which is in the light gray or silver, whatever you want to call it, and the 34 EMA on the low. Now, I do want to mention, and I think it's worth mentioning, that if I take the same pair, I'm going to jump on over here on MT4 and take a look at the Aussie versus the Kiwi, blow this daily chart up. I want to mention that you could see very different readings on these moving averages, because now you're looking at the difference between a 6-candle week here on MT4 and a 5-candle week on TradeStation. So the actual levels, and it's 7:30 now, so I have my handy dandy little clock telling me that it's 7:30, so we could see some volatility, and this is hopefully going to be a disappointing jobs number. So I won't freak out in the middle of this. I don't freak out. I've been doing this too long, but I won't freak in the middle of this video. We have employment change numbers and the unemployment rate, just for those of you that are curious when you're watching this on replay. Wow! Holy moly. Okay. This is a good number for those of us who are selling Aussie, which should be most of you, if not all of you, because we've been talking about this at TFF and in the chat room pretty much incessantly. The employment change number was expected to come in at 10.3. It came in at negative 22.6. I'm not rooting against an economy. I'm certainly not celebrating that people did not get jobs, but in terms of where my trade is positioned to benefit from, I'm selling Aussie, mainly because the head of the central bank there has been talking about why he'd like a weaker Australian dollar. Okay, so all that aside, our most recent trade in the Aussie versus the Kiwi was built upon a correction into our zone, but I want to mention the zone can be pretty different depending upon 5 versus 6 candle week. So right now this zone is sitting at 108.10 and 108.34. So I'm just going to write that down, 108.10 and 108.34. The reason I'm going to write that down is because we're going to go over to TradeStation now with its 5-candle week. And what do I mean by 5-candle week? There is no Sunday candle on the TradeStation charts. There is no Sunday candle. That means that it's built into Sunday, Monday is a single candle. If you contrast that with MT4, Sunday and Monday are 2 individual candles. And you talk about a moving average that plots on a daily time frame, and you go back 20 periods, there's going to be a huge difference because I have an extra candle on one chart. So for those of you that are wondering right now how that Aussie situation's playing out for us, pretty darn well. We're seeing a nice follow through on those Aussie shorts. Okay, but let me stay on topic here to Trisha's question. So I already told Trish that, one of my besties' names is Trish as well. So I kind of feel like I'm talking to my friend here, which I am, because all of you, I feel like I kind of know when you're in the chat room with me for any length of time, and I exchange a lot of emails with you all, so it's pretty cool. Taking a look at the way in which the moving averages differ is one part of it, but that's also the reason that we don't begin and end the conversation with where is the moving average. I'm not going to blindly put a 108, say 10 aggressive entry and then a 108.50 conservative entry solely on these moving averages. I want to see where we've exhausted before, previous lows. I want to see where there's major and minor psychological levels. So if I take a look now, I contrast those readings with what I have here, and let's see, what do I have readings here? And I'm going to push this off the hard right edge a little bit so we can look at it. All right, here we go. So I have a reading here of, let's see. All right, so I have a 108.06 and a 108.60. Okay, in this particular example, it isn't that different. We talked just now about a 108.10 and a 108, was it 34? Yeah, 33, 30, no, 47. I don't know where I went, 34. 108.47. So the difference between the MT4 and the trade station is not that big. So I know that the 108 handle, the major psychological levels in play, I may want to step out in front of that and set up a short sell in terms of wanting to take advantage of the selling pressure that I think will be waiting at the 00. And then I could look at the 34 EMA on the low and say to myself, well, it's pretty close to the 50 pip level, so I could put another order up there. But I think the gist of Trisha's question, which is one that I think has a lot of moving parts, and I'm touching on them a little bit here. We talk about them every morning in the chat room, and I think this is a great beginning to that discussion. And that is this. The aggro entry is an optional entry. You'll know because the aggro entry is typically a dotted, not typically, it's a blue dotted line. It's optional. I could think about entering here, and I'd be more interested in entering. I'm just going to, just for the sake of argument here, just put these lines and levels in there. The solid is my conservative entry. The dotted blue is my aggressive. So what I want to do, and let's think about the arithmetic. I don't know how many lots you all trade, so I'm going to use my example of 6 lots. That's a pretty common entry for me, 6 full-size lots. I'm somewhere between 4 to 8 lots typically, and 6 is a pretty common number of 6 full-size lots. I'm not a huge trader, by the way, gang. I do want to mention that cumulatively, I might end up in a lot of positions when you consider, each individual entry across multiple pairs. But I don't necessarily have a single huge trade in one pair or even at one level. And this is at the heart of aggro and conservative entries. So if you have 6 lots, you have a couple choices. You have really, if you want to think about the mechanics of it, you can enter one lot at 6 different levels. That's not what I'm going to do, but I could. If I wanted to enter one lot at 6 different levels, I could. Or I could enter 2 lots at 3 different levels. Or I could enter 3 lots at, you guys see where I'm going here with this, right? At 2 different levels. That's typically what I do. I'll take 2 different levels and break it down. That's typically what I'll do. Now, one of my favorite splits Now this is not even giving you the flexibility of the splits you could have. Sometimes you'll hear me refer to a 2-4 split. All that means, very technical, I'll tell you. All that means is I'm looking at, say, 2 lots at the aggro, and then I'm looking at the remainder, in this case 4 lots, at the conservative. Here's the only rule of thumb. You don't have to enter aggressively, but sometimes you'll notice that if you don't, you won't have any position when the market starts moving in your direction. It's a shallower correction within the context of a trend. The market isn't coming back to you that much, but enough to where it's appealing to take a little piece of that trade. But we do so in a small way, just putting some skin in the game. When we get that deeper correction to the conservative entry, solid line, I put in the rest of my position. Sometimes you might see 3 different entry levels. Sometimes we'll have 1 or 2 aggressive levels, aggro levels as I call them, and then 1 conservative. Sometimes you'll see 1 aggro, 2 conservative. There's no fixed way you have to do this. You look at all the potential levels that could be in play and then you enter accordingly. Conservative levels should be where most of your position is built. So when I talk about conservative levels, you'll know my conservative trades because for the most part you'll see multiple entries. For example, here on the Euro-Loonie, you see multiple entries, but the sum total of those entries have to be designed in this way. I can't have more lots positioned aggressively than conservatively. So you see only 2 lots here at the aggro, 4 at the conservative. Let's say I had 2 aggressive levels. Would that mean I would go 2, 2, 2? No. I mean, sometimes if you want to, you could think about that, but my preference is for you to think about it in this way. Maybe 1, 1, 4. You can do 1, 3, 4, 1 aggro, 3 aggro, and then 4 conservative. That would put you at 8 lots. Or you could do 1, 2, and 3. 1 aggro, another 2 aggro, and then 3 at the conservative. What I'm trying to get across is add up all your aggro entries. The sum total of that cannot exceed the sum total of your conservative. Again, let me say it. The sum total of all your aggro entries cannot exceed the sum total of whatever you have parked and waiting for a conservative. Doesn't mean that I'm guaranteed to get my conservative. You know, there's a number of positions here where I only have my aggro. If the market only came back to me a certain amount, notice I only have 2 lots on the Euro-Yen. That's it. All right. I have 4 lots on the dollar-yen. I didn't put in an aggro there. I didn't put in an aggro at all. Aussie-Swissy, it's an aggro trade, only 2 lots. On the Aussie-Kiwi, I have 4 lots. I didn't have an aggro. So you don't have to take the aggro. I want everyone to understand that. So back to the way you split it. If I have decided that I want to take an aggro, and how I determine where those lines and levels are, you know, a little bit of that is some feel in the market. I'm not completely going to look at this mechanically. I think that's one part of your question here, Trish. You know, how do I decide where my aggro and conservative entries will be from one trade to another? The wave and the 20-period simple are definitely major guidelines. So are recent highs and lows that you'll hear me refer to as, how funny, Trish, you'll get a kick out of this. My friend Trish just texted me. Anyway, it's, you know, gang, it's been a long day, and we're doing pretty well on the P&L. So you got to have some fun with this. All right, so the 20-period simple and the 34 EMA on the low are going to be guidelines for me within the context of the downtrend. But when I refer to things like breadcrumbs, I'm talking in that Hansel and Gretel way of literally where has the market been before, those highs and lows. Those are breadcrumbs. All the technical analysis in the world, all that fancy schmancy analysis is not going to do me any good unless I can read a naked chart and say, you know what, this is where the market's been before. I see a low at 107.42. That meant something to a group of traders. I can see a number of highs along this level here around basically between 109 and say 109.15. That area means something. So that has nothing to do with technical analysis. It just has everything to do with the fact that we put those highs and lows in on that chart, and these are breadcrumbs. So that's going to be a big part of the conversation too. I'll refer to these as breadcrumb highs. You know, that could have a number of different kind of breadcrumb highs. But near term, typically, near term meaning these highs and lows were put in recently. Okay, these could be breadcrumb lows. If you hear me talk about breadcrumbs, all I mean is the market left the breadcrumb here. This is really just support. But the fact that I use breadcrumb tells me this is the reason I'm using the word breadcrumb is because it happened recently. You know, and I think that low tells me more than just any old support or resistance level. Okay, I could even take a look at the high here at 108.61, and then I could look at this high back there, 108.80. It's a 19 pip, area between those two highs. But again, all I'm trying to determine is where were some of those near-term support and resistance levels that were put in. That's it, okay? And I know this video probably turned into a much longer video. Like I said, it's been a long day. I'm no longer on DEFCON 5. Got a good number out of the Aussie. That puts me in a darn good mood. But I really wanted to make sure I addressed this question because I think it's one that a lot of people have. I do not blindly follow the 20 and the 34 EMA high or low. Okay? The blue line, the middle line of the wave, is really just a line that's sandwiched in between the high and low. It's not necessarily a big part of the decision-making process for swing entries. And then in terms of deciding where my aggro and conservative levels are going to be, again, I use those moving averages as guidance, but they are not the sum total of what we look at. So part of what we look at in the morning to determine how we're going to build our positions is going to be major minor psych levels. It is going to be those breadcrumb levels. And when we start building these positions, you'll notice that it's just not a single level that we say, okay, this is the magical level that if I buy or sell it at this point in time, perfect, I'm going to be great. No, it's usually an area. It's almost like a safety net. Again, we're talking about markets that are moving up at our 12 to 2 or 4 to 6 o'clock angle. So we're really talking exclusively about trend following, which we have been doing a lot of. I know a lot of you have followed me into the euro yen, have followed me into the dollar yen, have followed me into the pound yen. Today we're getting some really nice follow through on those Aussie trades. So we had great yen follow through yesterday. Some really nice Aussie follow through today. I realize I'm turning this into a trade update now, but my whole point was to answer this question about the 20 period simple aggro and the conservative green line in an uptrend in the 20 period simple aggro and the red line in a downtrend. So again, those are guidance levels, but they are not the sum total of what we'll look at. And if you're ever curious about why I picked the levels that I picked, typically in the chat archives, it'll be pretty well explained. But if you're curious about the levels, just email me and I'll be happy to tell you what I was looking at. But what I'll tell you is look for previous highs and lows before you get all fancy with pivots or Fibonacci or chart patterns or even trend lines. Just sometimes look back at those objective breadcrumb levels. They are more objective. They've already proven to be a decision level. A decision level is what? A level at which traders made a decision to either stall, accelerate, or reverse. So we'll get into a lot more of these basics. This video is probably a great example of what I'll be doing starting next week. We're going to break the chat room down into kind of two sessions. A 30-minute kind of getting started session, roughly from 8 to 8:30, and then the more, I don't want to say hardcore chat, but the more quick-paced, here's the trade, let's get going chat will go from 8:30 to 9:30, maybe even 10 o'clock if we're trading yen pairs as actively as we are right now, or if the dollar is in play. So we're going to break down the chat basically to a 90-minute conversation, 30 minutes for new traders, and kind of going at a slower pace and being a whole lot more, well, I want to explain things with more detail to those of you that haven't quite caught on to the jargon and need a little bit more explanation as to what we're doing and why we're doing it and what I'm seeing. And then when we get into 8:30 to 9:30, we'll start moving at a quicker pace. So I can kind of work in the needs of both the kind of members we have in the members area. And, you know, I realize all of us are newbies at one point, and so I want to make sure that all of us are on the same page. Okay, so thank you very much for your question, Trish. And I hope everybody that you keep sending those questions in, because every now and then they'll turn into a video just like this one. So next week we're going to start that new breakdown in the chat room. So I'm very excited about that. I think it's going to be a lot of help to those of you that need a little bit more education, because those surveys were eye-opening for me, just how many of you need some foundational education, either to frankly unlearn what wasn't working and to learn what we're doing here at TFF, or just basically you're new to the whole process of trading and you just need a little bit more of a slower paced conversation. So that will be a caffeine-free session. No Red Bull or coffee for Roggy for the 8 to 8:30 session. That'll help a lot. All right. Okay, gang. Thanks so much, and I'll see you in our next update.